There is no doubt that today is going to be explosive. What's going on? Machiguru's Justin. The following cryptocurrencies are included in the Grayscale Digital Large Cap Fund, which has been approved for trading by the SEC, Bitcoin, Ethereum, XRP, Solana, and Cardano. Okay, so I'm rather certain that this is a basket of these cryptos, which have been approved for trading and are part of this fund. It is allegedly purchased rather than purchased over the counter, I believe. Well guys, this is huge. As a result, everybody purchasing this fund will be diversified, right? Furthermore, this is distinct as it isn't a single asset, should we say? There are several. To those who are afraid to invest heavily in a single cryptocurrency, is that correct? They're going to this fund right here, which has the most weight and contains Bitcoin. Let me try to locate it. Guys, here it is, shall we? Accordingly, 72% of the total basket is made up entirely of Bitcoin, which is the holding for Grayscale, alright? You will essentially be purchasing the majority of Bitcoin when you purchase this. Ethereum is in second place with 17%. Guys, XRP is 5%. Cardano is 1%, and Solana is 4%. Alright. Even though it's not dispersed equally, if an investor wants exposure to the cryptocurrency industry, this is still a safer option. You think they'll just go to this one? In all honesty, this is enjoyable because you're involved in a variety of assets. Primarily Bitcoin, which has consistently increased in value over time, correct? This is great, but I really hope that the weight of XRP is increased. Alright, much greater than 5%. I have no idea why Ethereum is just 17%. To be fair, Bitcoin should be lower. The Fed must just inject as much liquidity as it can. I believe that's when Benjamin Cohen starts acting pretty strangely. QT remains unchanged. Although this could be a negative indicator, I don't believe it. We will clarify. The group will keep cutting back on its Treasury securities holdings in agency debts and agency mortgage-backed securities. Alright, so they will continue to reduce the number of men. Okay, we need QE again. It implies that even if rate cuts are considered, liquidity will continue to dry up. Less money in the system means more difficult conditions ahead, which is why QT isn't preventing the bearer signal for risky assets. I don't believe so, as evidenced by this change from QE to QT in 2017. In 2017, Bitcoin and other cryptocurrencies performed incredibly well. In June 2017, the Federal Reserve initiated quantitative easing QT following the 2017 bull run. Alright, nothing prevents us from dealing. Regardless of whether we are in QT or QE, Bitcoin will set new records in Q4 and Altus will also be in Q4. These are the words of Global X. I genuinely believe that we will be developing new ultimates by the end of this year. Therefore, it is irrelevant. Alright, so QE is only important if we want to witness some insanely high-speed runs such as. It's so explosive that it coincides with the 2017 XRP, Ether, and Bitcoin runs. That is the thing we require. We will need Q at that point, but I believe that will occur in 2026. Alright, basically, they will have to print a lot of money when the crisis hits in early 2026. QE will then be rampant and everything will blow out, but even if we are in QT, right, liquidities will probably dry up a little before then. It makes no difference. Since the Fed declared in June 2017 that it will start to reduce its asset holdings after years of using quantitative easing QE to stimulate the economy following the 2008 financial crisis, I believe we will continue to rise. What was the next action taken by Bitcoin? Correct? It went on a rampage. The wildest run was that one. I'm not sure if it makes a big difference, but I don't think it does. Why? No one else has any news, but I have crazy news for you all. I just had a weird development. The UCC Dominus chart is the one that it all boils down to. Tether has been going on a printing binge. Speaking of breaking news, we're back underneath it, guys. This moving average, which briefly held down Bitcoin, XRP, and Ethereum for 291 days, nearly a year, just broke through, broke down, and broke below it. A retest of this moving average is now required, even if it did break below it here. That was a fake out. Well, in some way, perhaps like this, and it must close within the next 5 days. The top of the body of this candle, which you can see here, needs to close below this yellow moving average. If they are able to do that, I believe this is so important that it should now hold it as resistance on the regular candles. However, it did close a body below right, so it could have been confirmed already, which means that the cryptocurrency market will start pumping. I'm not sure though, because I'm on the high finish easier, so I'm not sure. It just looks like a bullish crypto suit, so perhaps. Alright, so this is serious, guys. All of this is taking place right now, and it's quite positive. I honestly didn't get why so many people are pessimistic about rate reduction when the market pumped really aggressively the previous time the Fed dropped rates. In fact, we will be in the exact identical position in almost a day. Well, the last time the Fed cut rates, they did something like this in September of 2018. I believe that was when they first started cutting rates and we went up to 78. This is for Bitcoin, right? 78, whoa. If we continue on the same trajectory as it did in the coming months, Bitcoin will hit 200 XRP, which is 10 or even more. Just take a look at this, it's amazing. The fractal bottoms out right here, in October, which is when the XRP ETF's launch occurs. From there, it only goes up, but gosh, guys, if you're not looking forward to that, I don't know. I am at a loss for words. According to bar charts, the S&P 500 has finished higher when the Fed lowers interest rates within 2% of the stock market's all-time highs. Over the following 12 months, the S&P 500 finished higher. A hit rate of 20 out of 20 is 100%. So, when interest rates were being lowered by the Federal Reserve, well, within 2%. The stock market's ultimate highs, so essentially, the S&P right at the utmost highs is, I assume, the Dow Jones and every other stock in the market. Over the course of the following 12 months, it pumped right and got higher than where it started. From the beginning, where it started trading, it went higher. So, from now until September 26 of next year, that's when we should have pumped. Alright, I'm not sure how high now. However, the figures displayed here are for the upcoming year. 8%, 15%, 20%, 24%, 28%, 16%, 33%, 2021 8 9 11, another 8.6, 2, 3, 8, 8, 8, 6, 7, 9, 10. By the way, those are big pumps. This pertains to the S&P 500. Don't you remember that when we discuss cryptocurrencies, there is a volatility multiplier? It's probably 2 to 3 times for Bitcoin. It's basically 5 to 10 times what the S&P will do for XRP. I'm genuinely blown away by this. Wow. The S&P 500 has increased by an average of 14 months since the Fed dropped rates by 2% of all-time highs. Let's check the S&P now. Alright, 14 takes the S&P straight from here. Oh my lord, 7.5k, gentlemen. This is insane. No, this is absurd. Let's take a look at 14%. Assume we began on May 20 honest and have continued up to this point. Okay, starting on May 14th? Back then, where was Bitcoin? May 14. We were present, so let's assume that at the bottom of this, it is 26%. If you were to pump 26% from here, that would be roughly 150 for Bitcoin. Alright, depending on how crazy things become and how much FOMO there is, it might even be higher. Correct.